All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we're going to be talking about some portfolios that I have within the dividend tracker. This is going to be a pretty interesting video. We're looking at some long-term dividends versus some more higher yielding dividends. And the reason being, look, I have 5 different portfolios. You can see Canadian stocks for TFSA, which hold a bunch of long-term Canadian stocks. I have Ideal USA portfolio, which is only Yieldmax. I have a long-term individual stock portfolio, which consists of fantastic long-term companies. And the reason why I have all these portfolios up, guys, I'm so excited if you can't tell, is because I have been tracking them for the past 5 to 7 months. And what I've done is I want to look at the returns with you. I want to go over the profit and loss because does holding a more stable, let's say, company or a more stable stock in theory produce a better return than, let's say, something that is high yielding such as Yieldmax or a Yieldmax ETF? Because in this video, I want to show you guys there has been countless companies which have been viewed as long-term safe holdings which have had huge downturns, and yet the market is up about 80% over the past 5 years and really about 30% over the past year. And I want to show you how just because you put your money into something that you believe is long-term and sustainable doesn't necessarily guarantee it. And what potentially is more guaranteed is high yielding investments, is high income from dividend investments. So what I want to talk about in this video is I want to talk about some long-term stocks which have maybe not done as well as investors would have liked, and how I really invest for income because income is more predictable at the current moment. So I hope you guys really enjoy this video. I'm going to enjoy this video. We're up to 6,041 subscribers, 428 subscribers in the past 20 days. Can't say nothing more about that. That is awesome. Let's keep it going. So we're going to go kind of portfolio to portfolio here. And I want to show you guys what has happened over the past little while. So this is my Canadian stock portfolio for a TFSA. This is what I called it. Basically, all it is it's 27 different holdings, and they all consist of Canadian stocks. They're all on the Toronto Stock Exchange. And you can see here, we've had some companies that have done very well. AEM.to, GIL.to, they're all performing about 40%. We have 25. You could see there's a lot of fantastically performing stocks when we look at individual companies, but at the same time there was a lot of companies that were viewed as more long-term holdings which didn't perform as well, such as MG.to, RCH.to, and I don't necessarily know all these companies off by heart because there's a lot of companies with them within the portfolio, but these were companies which I viewed to have maybe smaller dividends, like a smaller dividend yield, and I viewed them as pretty stable holdings. You could see here that not many holdings here have a greater dividend than 5%, only 4 of them, when we have 27 other holdings which are viewed as long-term stocks and ETFs to hold. But when we look at the returns, you could see here that we have a majority here that are even in the negative while producing only a 1 to 2% dividend yield. So there's something to keep in mind. Another thing, Ideal USA portfolio. What is this portfolio? Well, this is only 180 shares of Yieldmax, and to date back, we look at the average price on this position, $20.11. So you could see here by holding Yieldmax all the way since June. This is, what are we at? June. That's probably about 6 months ago. 6 months ago, holding Yieldmax, you're down about 15%. But at the same time, in holding Yieldmax, I don't actually have Yieldmax up here, but I have it here. You have received a lot of dividends along the way. And with Yieldmax's current dividend yield, it doesn't show it here, but about 58 to 60%, you've absolutely covered your loss. You take 50 to 60%, you're looking at a 30% return. You add that into here, you're looking at a gain of about 15%. So as you could have potentially invested into other stocks, which sure, there are some stocks, a majority of them did very well, but there are also some long-term stocks that have underperformed, and you could have been pretty much earning a 15% return per year potentially if you had invested in Yieldmax about 5 months ago, and that's only 5 months. But we're going to move on to the next. We're going to our long-term individual stock portfolio. This is for the American side. And stocks like AVGO, the reason why I'm also potentially going to be getting rid of the dividend tracker is it doesn't do a fantastic job at representing stock splits. AVGO is not down 87%. They've actually performed very well. They did a stock split. Same thing, SCHD did a stock split. They are way up, but the dividend tracker did a poor job of representing that, and it actually totally missed their stock split. It didn't convert any shares. So certain stocks are actually not down as bad, but certain stocks are, such as Intel, for example, which I have not included here, but I do have Dollar General down 46% in the past year. This is a company that's viewed as a long-term investment, only paying out a 2.88% dividend. So you can see here, not a lot of cash flow, viewed as a long-term investment, and down almost 50%. Same here, we have GPC, Genuine Parts, down once again. Over the past 5 years, only producing a 10% return. That's not even keeping up with inflation. That's a 2% return every year. You can see here, in the past year, down 22%. We have as well Schmuckers, a fantastic company. I love their jam, down 6%. This is viewed as a long-term holding. Over the past 5 years, 5.88%. That's not that great. Like, we need to see if we are buying companies for the long term, such as Schmuckers. I understand, like, Smuckers, you can't necessarily, not every single company is going to perform exactly how you want, but when you buy a company such as individual stocks and they don't produce such a huge dividend yield and they go down at such a huge rate, it's really discouraging when you're looking at long-term investments. You also have TD. TD was a stock that I was looking to get into for a very long time, but the stock has not moved in a very long time. In the past 5 years, actually down almost 4%, and it barely produces a dividend yield, about 4% or so, I'm pretty sure. So that's another one to keep in mind. Then we have our Questrade high yield portfolio. It's very difficult because, once again, dividend tracker does not do a good job. This is me reinvesting. This is not the portfolio just naturally growing. So once again, it kind of doesn't show the markers very well here. You could see actually on Yieldmax, because I've been reinvesting, I'm only down about 3%. I do have my portfolio up here, so we can kind of see, yeah, 3 to 4% looks like what my Yieldmax position is currently at. And you got to keep in mind, I've been receiving dividends along the way. My portfolio is doing not bad for the current time being, even though I have some investments that are in the negative, such as SPX and ULTY potentially. But the reason why I was so excited to make this video is just to show you guys, like, there is no certainty when it comes to investing. Investing is putting your money at risk in order to receive a return. And you could potentially put your money into long-term investments. And of course, I will absolutely look to do so. I think long-term investments are fantastic, but what are the right investments? I do believe the index is perhaps your best option when it comes. It's really fun to pick individual stocks. I love picking individual stocks, but you also run the risk of potentially losing a decent percentage of your investment and not being able to generate too much of a return in terms of capital appreciation and then also the dividend. You have Yieldmax on the opposite, on the contrary, where you can pretty much secure a lot of income, a lot of dividends, but you don't secure capital appreciation. But when you're looking at SPY, you could buy SPY and you can secure capital appreciation. So there's a lot of different ways to play your investments. I just wanted to show you guys how some long-term investments, some stocks that were viewed with small dividends, even though they pay a small dividend, even though they have great dividend growth rates over time, they are still subject to losses as any stocks are. And of course, I could mention Apple, I could mention Microsoft, some other great S&P 500 stocks that have performed very well, but I wanted to use some more negative examples in this video to show you that it's not all rosy and you do put your money at risk when you do invest. And investing in what is believed to be a long-term stable company could potentially produce no return, and with no cash flow coming in, it could potentially be a stagnant return. The one thing that is great is when we do invest in Yieldmax, because of course I do hold a lot, you receive a return at this point every single week. and you could choose to take that money out. You could choose to reinvest it, but you need to find something that correlates well with the market. And that's why I invest in Yieldmax. I believe it does so. And I do believe the index is a fantastic investment you can't beat. So this is just my little video to give a spiel on some long-term holdings. Of course, there's a lot of fantastic long-term holdings. We look at the end here. If we can go to the second page here, it'll probably show us some fantastic holdings like Kellogg's up 50%, WMB up 46%, Walmart 42%. There's some fantastic holdings. I hold AT&T up 30%, and that's a stock that I own. It's doing very well. So there's fantastic long-term investments, but you're never really guaranteed much. And the one nice thing about holding Yieldmax or a Yieldmax investment is you know the income is going to be there. Even if the stock price falls, the income is going to produce. As long as the income outweighs the stock price depreciation, then you have what's called a winning investment, an investment in the positive. So I hope you guys did enjoy this video. A little bit of a spiel, but I hope you guys did enjoy it. If you did, we're up to 6,041 subscribers. We'll post a video every single day. Do my best, and let me know anything you guys want to see in the comments down below, and I'll be sure to try and create a video and give you a little shout out for that. So thank you very much for watching. I hope you guys have a great day, and I hope to see you guys in the next video.